Thursday, the 10th day in the month of August, and it's 10 a.m. right here in Lagos, Nigeria. Good morning and welcome to Business Morning. I'm Imi John Mekwa. Well, let's get right into business, what we do here, which is 55 minutes of relevant and current business conversation. We start with global oil. It's retreated on Thursday from multi-month peaks it hit in the previous session as higher U.S. crude inventory and sluggish economic data from China raised concerns about global fuel demand. Brent crude fell 9 cents to $87.46 a barrel, hitting 90 soon, I see, after settling at its highest since January 27 in the previous session. West Texas Intermediate crude dropped 6 cents to $84.34 after it settled at its highest since November 2022. U.S. crude inventories rose by 5.9 million barrels in the last week to 445.6 million barrels, according to the United States Energy Information Administration data. Weighing on market sentiment, the consumer sector in China fell into deflation, and factory gate prices extended declines in July as the world's second-largest economy struggled to revive demand. The market is awaiting July's consumer price index from the United States, which is due later on today and will indicate the Fed's future monetary policy. Market watchers expect the CPI to show a slight year-on-year acceleration, while on a month-to-month basis, consumer prices are seen increasing 0.2%, the same rate as it did in June. The commodity space now, soybean and corn futures edged lower on Thursday as market participants took positions ahead of a key U.S. supply-demand report amid forecast of improved weather for crops in the Midwest. Wheat rose, recouping some of the losses from the previous session on support from risks to supplies from Ukraine and Russia. The most active soybean contracts on the Chicago Board of Trade was up 0.4% at $13.13 for a quarter of a bushel. Corn rose 0.3% to $4.95 for three-quarter of a bushel. Wheat climbed 1% to $6.41 for a quarter of a bushel. Traders are adjusting positions before the U.S. Department of Agriculture issues a monthly crop report that's due on Friday. Analysts on average projects the world agricultural supply and demand estimate will trim the forecast for U.S. soybean and corn production. The corn harvest could still be the second largest on record, with weather conditions seen turning more favorable. Exporters sold 251,000 metric tons of U.S. soy to China. That's the largest buyer of oilseed. For delivery in 2023-2024, the U.S. Department of Agriculture says that the weekly export sales data is due today, Thursday. And edible oil now, Malaysian palm oil futures fell, also surrendering gains from the previous session as traders await key palm oil board and cargo surveyor data due later on today, Thursday. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange slid 40 ringgit to 3,731 ringgit. That's about $816 per metric ton in early trade. The Malaysian Palm Oil Board is scheduled to release July supply and demand data later on in the day. Cargo surveyors are also due to announce October 1st to 10th export shipments. The survey estimates that July inventories will rise 4.2% from the month before to a 5-month high of 1.79 million metric tons as production climbs. Dalian's most active soy oil contracts gained 1.5%, while its palm oil contracts rose 0.7%. Soy oil prices on the Chicago Board of Trade were down 0.6%. Well, let's come back here to Nigeria, where the Presidential Committee on Tax and Fiscal Policy Reforms says that ministries, departments, and agencies and other government agencies should not be responsible for direct collection of revenue in the country. The chairman of the committee, Mr. Taiwo Oyedele, who was a guest on our sister program Sunrise Daily yesterday, recommends exclusive collection by the Federal Inland Revenue Service to ensure efficiency.
Even though our revenue collection from taxes is one of the lowest in the world, ironically, our cost of collection is one of the highest. So, and the reason for that is because you've got all manners of agencies. At the federal government alone, level alone, we had 63 MDAs that were given revenue target last year. No, actually 2023 budget. And two things that will come up from that. On one hand, these agencies are being distracted from doing their primary function, which is to facilitate the economy. Number two, they were not set up to collect revenue, so they won't be able to collect revenue efficiently.
Okay.
So move those revenue collection functions to the FRS. You gain two advantages. The cost of collection and efficiency would improve. These guys will focus on doing their work, and the economy will benefit as a result.
Well, that was Mr. Taiwo Oyedele. We're going to explore some of the things he said, and not just that part you heard, but the full interview. And to help us do that is Dr. Muda Yusuf. We know him as a regular on the program, the Chief Executive Officer of CPPE. Good morning, Dr. Yusuf. Thank you so much for your time this morning.
Good morning, Ine.
So I guess
my pleasure.
Great to have you. So I guess the most obvious thing that Mr. Oyedele said there is that the FIRS should be the sole collector of taxes. How do you see this working, and what are your immediate thoughts on this proposal?
Well, the whole concept, I think, is a very good one. To ensure efficiency in tax administration and to, reduce the level of leakages. I think from that point of view, it is good. But we need to also be careful so that we don't underestimate the challenges involved. Because the expertise of Federal Inland Revenue Service is on taxation. Now we are now veering into non-tax revenue collection, which requires a different kind of skill sets or competencies. For instance, if you throw an FIRS person into the Nigeria Customs Service, how will he or she understand the processes of classification of HS code, the process of valuation of imports, risk assessment reports, power, and all of that. The same thing in oil and gas, the same thing in aviation. You need special expertise and understanding of those sectors to be able to know exactly what the shape or structure of revenue should be. Because they are still want to issue invoices and things like that. So we need to figure out properly how these things are. Non-tax revenue is completely different from pure tax revenue. I mean, for a tax revenue, the FIRS can come to your office, examine your books, look at your expenses and all of that. But it's a completely different story when you are talking about non-tax revenue. And in any event, you already have the TSA, the Treasury Single Account. And the whole essence of the TSA is to consolidate the revenue inflows from all agencies of government. Of course, they have been pushed back in terms of non-compliance and all of that. I think this whole initiative can leverage on the TSA initiative so that we are not reinventing the way. Let us see how we can pull all these resources together. It doesn't matter what name you call it. You can say it is FIRS, you can say it is TSA, whatever it is. Because the way it is sounding is as if we are going to deploy FIRS officials to over 60 agencies to go and be collecting revenue. This is an age of technology. So I don't see people going around saying they are revenue collectors. You should just have a structure driven by technology so that whatever revenue is coming, you go directly into whatever account is designated by government. Okay, so I think we should just improve on this TSA rather than reinventing the wheel all over again.
Okay, Dr. Yusuf, so it seems you are saying let the FIRS focus on the tax collection and then the MDAs focus on the non-tax. But what about if you look at it, perhaps the FIRS maybe having a department or unit that also focuses on the non-tax collection? I mean, with the help of technology, as you have said.
There's nothing wrong with that. What I'm saying is that for you to understand the revenue structure, you must understand the system. If you go to NIMASA now, you go to MP or you go to Civil Aviation Authority, who is issuing the invoice? You know who evaluates how much actually should come in. What I'm saying is that they already have a structure of invoicing, of evaluating import duty and all of that. What is important is to have a channel, technologically driven, where all these revenues will be flowing to seamlessly. And to complement that, we can have quality framework for periodic audit to ensure that what is coming in is what is actually coming in. And we also need to situate this within the operational modalities of each of these agencies. Quite a number of them fund their operations from their own revenue. It is the surplus that they remit. So if we say that all the revenue should go first into FIRS, then all of them will have to submit budgets to the National Assembly, then be subjected to another rigorous bureaucracy of how to fund, get money approved, and so on and so forth. This may have some other implications. And of course, there are also legislative issues. There are legal issues. Many of these agencies have legal instruments that guide their operations across the entire spectrum of their operations, whether it is funding, whether it is revenue. So all of these things also needs to be taken into account. So just as I said, the principle is fine, but we should not underestimate what it takes, to begin to, pull all of these things together and say they are putting them in a common pool. I think we should use technology. We should look at the TSA principle. If there are gaps there, we should have a system of periodic audits so that people remit what they are supposed to remit. Because what you have had in the past is that the political will to compel these MDAs who are generating non-tax revenue to remit to government, the political will has not been there. We know what happened in the last National Assembly, where even the Senate President, the leadership of National Assembly were crying that these MDAs were not forthcoming. They were not remitting. Some of them don't have accounts. They don't respond to audits. So these are some of the discipline we need to bring into the space. Those things for me are much more critical than having an entirely new structure as to how to channel the revenue.
And I
the
guess
discipline of compliance is very key.
I guess this will also affect the cost of collection. He did say that Nigeria has one of the highest cost of collection. Meanwhile, what we are collecting is not as high as many countries.
Well, I don't quite understand what he meant by cost of collection. If you have a revenue coming to customs, there's a technology in place as to where the revenue should go. If it goes to the designated account, it hits the account of FIRS. What has been happening is that in the chain, there are all manner of compromises that takes place. And even some of these costs of collection, these are some of them that are even approved by government itself. FIRS has a percentage of how much it takes from the amount of revenue collected. The customs also has a percentage of how much it takes. These are regulatory issues. These are things that were approved by government or by relevant legislation as to the proportion of the revenue they generate that should go to them as cost of collection. So if you don't want that again, we can just remove those legislation and allow all the revenue to go into the common pool. So we need to look at these things thoroughly, and we also need to engage stakeholders in a very robust way so that we don't disrupt the activities of some of these agencies. And more importantly, we need to ensure discipline among the MDAs, to ensure compliance, to ensure full disclosure, and to ensure that they keep, to the financial rules that guide them. What we have seen in the past, that the level of discipline is extremely weak, because most of those agencies are also being manned by very politically influential people. So there's no transparency. So we can do a lot more of that. We can have a lot more audit, financial audit, forensic audit.
So I wonder
these are the things that I think are missing.
So I wonder if this responsibility of the audit and, ensuring transparency, does it fall on the shoulder of the committee?
No. You see, well, it is part of the general issue of governance. There are some agencies that have not prepared financial statements for 2, 3, 4, 5 years. There are some of them that have not been responding to audit reports, audit queries. Some of them don't even keep accounts. There's no proper audit. These are gaps in the governance space, which I think is part of, because you talk about fiscal governance. These are gaps. So we need to institute structures to make sure that that happens as a matter of course, not necessarily being driven by FRS. But they should know that these are statutory responsibilities of agencies. Your accounts must be audited. At least you have to report your revenue, and everything will have to be properly supervised by the necessary agencies of government. I think this is what the fiscal governance thing is all about. So I don't think we can centralize that. What is important is to ensure that the governance framework is such that people comply with statutory provisions. And if there is no compliance, then there has to be consequences. In the past, there has been no consequences. National Assembly will invite some of them for hearing. They will not come. They will not present their budget. And they just move on like that, and nothing happens. So these are some of the things we need to address.
And these are some of the things that are chipping off the trust of taxpayers, and why we keep having the issue of a lot of people are, reluctant to pay their taxes, and widening the tax gap that he also referred to.
Of course, I agree with you. I mean, there is some issue of morality around even tax compliance. When you do everything practically on your own, you engage security, you dig borehole for your water, you generate your own electricity, you pay for practically everything.
Well, seems a little bit of hitch there with the network with Dr. Muda Yusuf. Dr. Yusuf, are you back? Can you hear me?
I think.
Can you hear me, Dr. Yusuf?
Yes, I can hear you.
Okay, go ahead.
I can hear you.
Yeah, you were frozen.
Yes. So I'm saying that these are some of the things that we need to ensure, because in order to elicit compliance, the government also needs to give back to the people. I mean, if you have a situation where you practically pay for everything, you pay for your education, you pay for your health services, you pay for security, you pay for your water, you pay. Then if you are relating with any agency of government, you also compelled to pay, in addition to the mainstream taxation. So I'm hoping that these are some of the things that will be streamlined, because part of the mandate of the committee is also to look at all this multiplicity of taxation. There's hardly any private sector organization or business, once you are interacting with any agency of government, you have to pay them for the service. In addition to that, you also pay your normal tax. So all these burdens are a lot on the citizens. And I'm hoping that, this is also part of the thing, because the mandate is quite wide. I mean, the task is a bit ambitious. So, but the whole spirit is fine. I mean, I hope that we get something concrete at the end of the day from the whole exercise.
Yes, because we know Mr. Taiwo Yedele, he's been advocating for this tax reform for many years. We have a lot of visuals of him. So, I mean, if he doesn't do well or is not effective, then, journalists will come after him. Just before we let you go, Dr. Yusuf, so he also talked about, some taxes that will be dropped. That will be, to reduce the burden. And of course, that gives a lot of businesses joy and anticipation of better days to come. But do you see that being realistic at a time when the country is looking for revenue like everywhere and trying to avoid borrowing?
Hello, Ini.
Okay, can you hear me now?
Yes, I can hear you.
Okay, so he did talk about some taxes that will be dropped from the tax list, not necessarily increasing the taxes to be collected and reducing some. I'm saying, do you see that as being realistic at a time when Nigeria is looking for revenue and looking for how to avoid borrowing? All right, seems we'll have to leave it there with Dr. Muda Yusuf. The network does not want. Dr. Yusuf, are you back?
They are not mutually exclusive.
Okay.
You should normally give concessions. You should normally give concessions to businesses. There is nothing wrong with that. After all, we are making a lot of savings now from the subsidy space. We are making a lot of money from the FX, foreign exchange convergence. And from this exercise, the efficiency of taxation is also likely to improve. That does not preclude, the need to also give tax incentives to deserving sectors of the economy. That is necessary, and those things are not mutually exclusive. It's also part of the mandate. There's a growth facilitation objective that has been given to the committee, and the way to facilitate growth is also to give incentives. So I think it's in order.
All right. Thank you so much, Dr. Muda Yusuf, for your thoughts this morning. Thank you, and have a good day ahead.
Thank you very much, my friend.
Let's take a break now. When we come back, the Naira crashed yesterday, really crashed. 925 for $1. Very scary. But we'll talk about that and a whole lot more at the commodity space after this break. Welcome back. It's Commodities time here on Business Morning on Channels Television. And joining me for the segment is Dumebi Oluwole, Senior Analyst of Financial Derivatives Company, joins us virtually from the island. Hi, Dumebi. Good morning. What did you do to the Naira yesterday, Dumebi?
It wasn't me. Supply demand dynamics.
That was harsh. More than 900.
Exactly, yeah. So we did see a drastic decline in forex supply to the official window, and this significantly pushed demand to the parallel market. Already we were seeing the parallel market rate trade at around 885 Naira to $1, 895 to a few days before yesterday, and then just yesterday it spiked to about 925. So actually it traded around 895 to 907 before now falling sharply to 925. However, by this morning it had already regained just by a little margin to about 907 to 902. So the main dynamics, like I already mentioned, just low forex supply at the official window, pushing demand towards the parallel markets. So, we had already had this conversation, I think, not long after the convergence of the exchange rates, exchange unification process. And the major concerns that I raised at the time was that there are still lingering concerns around Nigeria's forex supply. And this is because of our major sources of forex into the country. We've not really seen a significant uptick in those sources. And these include, non-oil exports revenue, all exports revenue, that's from crude oil, remittance inflows, foreign portfolio investments, and FDIs. The initial reaction that we got from hot money, which is basically FPIs, we're beginning to see that, slow down. And most of the FPI inflows went into stocks and bonds, and we haven't seen, the same momentum in terms of an increase in forex supply from the other sources. Crude oil revenue, it's still not, optimal, even though we've seen like gradual increases in crude oil. Crude oil production is still averaging about 1.2 million barrels per day, same as last year. So really nothing has changed in terms of the amount of money that, the government is earning in hard currency that will significantly nudge intervention and forex supply efforts at the official window. window. In fact, we've seen external reserves bleed so much this year, and we haven't seen that same momentum in terms of an increase. And again, it's still stemming from the reduction in terms of forex supply from our official sources.
Yeah, we have we're having so many seminars and talks on non-oil export, and then, we are seeing activities with dealing with oil theft. I just wonder how long it will take before these will materialize into more effects into the country, because supply is the solution that we need here.
Yes, you're very right. You're not wrong about the seminars. It's everywhere. Everyone is talking about it. We've been talking about it for a very long time, essentially just trying to diversify the country's, revenue base. It will definitely take some time, simply because these are structural reforms, right? And there's always that lag effect between when the structural reforms actually take place and when they begin to take full effect on the economy, and we can begin to reap the benefits of the reforms. It will take some time, but there are definitely steps the government can take to ensure that they are actually pushing efforts pushing efforts and intensifying efforts in the right parts of the economy that have positive multiplier effects on economic growth and inflation and even GDP growth, right? So the basic thing is, we already have established over time that Nigerian government is not earning enough to substantially bridge our infrastructural deficit, provide the necessary infrastructure, even for like health and education infrastructure that then now have positive multiplier effects on like labor productivity and even demand, and then even looking at boosting productivity from the agricultural, manufacturer, and even trade sectors, essentially the real sectors of the economy, right? So what we need is an inflow of forex into the country. And where will it come from? Definitely foreign investments, right? And we want to make sure that we're attracting the right kinds of investments. So while we know that all of these reforms, the immediate reaction, short-term reaction to it will be an inflow of FPIs, we want to ensure that we're attracting more long-lasting investments, which are FDIs, right? And because these FDI investments, they can't just up and leave whenever things get a bit tough, right? Unlike FPIs. And what does this mean? It simply means that the government needs to commit to, first of all, we've already started, right, in terms of taking up the necessary reforms, liberalizing the exchange rate, or the forex markets rather, and taking off fuel subsidies. But the government has to do the follow-up work here in terms of ensuring that these reform momentums don't die. And one thing that will definitely nudge the right kinds of investments is taking a very close look and reviewing the forex importation restrictions that still linger, right? Simply because this is a huge disincentive to the right kinds of investment that we need. The problem for Nigeria today is that we're not productive enough, we're not producing enough to even satisfy domestic demand before now even thinking of exporting. And what we need is the right kinds of businesses that will do this for us, not just producing raw materials, but boosting value addition, right? And this involves the entire supply chain from agriculture down to manufacturing. And we want to make sure, like I said, that we're attracting the right kinds of businesses. We have special economic zones. We've started on the right path by, trying to take up these structural reforms, but we have to go further down to avoid the negative impacts of certain reforms like this, just like what happened with Asia in 1997 that I think I had already discussed with you sometime, I think some time ago. So these are some of the steps that the government can take. We just need to continue on this structural reform momentum that we've already started to attract the right kinds of investments. One way to do that would be to even make sure that our special economic zones are working at at the right pace and working with the right incentives. The incentives are there, but there's clearly still a lot of bottlenecks and hurdles for businesses to even cross before things like bureaucracy, things like getting their goods out of the export zones or even bringing in their raw materials. So, and these are problems that shouldn't even be existing for companies within the special economic zones.
Yes, you said, I think you just got the word out of my mouth, because we had a conversation with someone who is involved in these economic zones, and he just gave a hint as to the requirement, how much you pay for you to operate there. And, it's just very discouraging. And in spite of that, you do not have all the infrastructural requirement that you need to run your business easily. But, I mean, before we get carried away by that, I was just imagining how much Nigeria would have been making at this time. Brent is close to $90, it's 87, 86 this morning.
Yes, you're very right. We're seeing that huge, momentum from crude oil prices simply because of supply concerns. We're seeing that OPEC is still being very conservative with its oil supply, and the markets are also shrugging off, China's deflation concerns as well. So what is happening with China is that China's inflation has been declining very rapidly, and that in itself is not a very good thing, simply because consistent disinflation simply means that people have money to spend but are not willing to spend simply because they expect that prices will continue to fall. And what this means is a contraction in business activity simply because it affects businesses. So it's a situation of prices rising too fast, which is inflation, that now causes, that contracts demand. And then while deflation situation where you have prices falling too quickly, that now affects businesses and then it affects output. So for a country like China that is, heavily dependent on an increase in output from businesses, which also comes from an increase in demand. That's why we're seeing this level of concern on deflation for China. Some analysts are even alluding it to something like what Japan experienced for over 15 years, over a decade. But it's not as bad simply because core inflation for China still increased, and monthly inflation for China as well increased. So the deflation concerns are not as high, but it's still something that the Chinese government is planning to tackle. As of today, they're already targeting an inflation of 3%. Which is very close to the global inflation target that countries should have over time. So inflation should not be too low, and neither should it be too high. So there just has to be that balance.
Maybe it's a funny world. Inflation is a problem, deflation is a problem. I don't know. Well, just tell us what else is happening in the commodity space, especially back home here.
Yeah, we're seeing something. We're really seeing a lot of things happening in the energy space. LNG prices globally are increasing simply because marketers globally are somewhat. So I wouldn't say hoarding, but they're just planning to take advantage of the higher prices that would come due to the forecast of a cold weather. They're expecting winter to be a lot more cold than what it was as of last year or even at the beginning of the year, and marketers are planning to take advantage of higher prices. And so for that reason, we're seeing global LNG prices increase. And now what this means for Nigeria is that cooking gas prices are also going to increase. The Nigerian Association of Liquefied Natural Gas have already come out to make a statement that cooking gas prices would start increasing from next week. I remember that as of last week, a 5 kg cylinder was going for about 3,600, while a 12 kg cylinder was going for about 6,000. But now we'll definitely see these prices increase again to what it was around last year, where we saw a 12 kg cylinder going for as high as 10,000 naira, going for as high as 10,000 naira. And although the increase in global LNG prices are not the only things that are factored into this price increase forecast, the Naira devaluation is a very huge deal here, and the fact that companies that are bringing in they're importing LNG into the country or importing LPG into the country are still experiencing forex scarcity, pushing them towards, the higher black market rate. So these factors definitely are feeding into cooking gas prices as of today, or will filter into it for next week and the weeks ahead.
Oh, I know some people watching now would already say, oh, it's time to increase the prices. Why wait till next week? But thank you so much to Dumebi Oluwole, Senior Analyst with Financial Derivatives Company.
Thank you.
All right, now let's take a breather. We'll be back for the markets. Welcome back. Still Business Morning here on Channels Television. It was a blood day at the NGX yesterday. Not very good one. Is it profit taking or what? Well, Anite Edet walks in with the details. Hi, Anite. Not a very good picture you have right there.
Yeah, good morning, Ini. Well, you might call it not a good picture, but to some people, what's good for others is a side swing for another. So it was a good day for some investors, but a bad day for the market, losing more than half a trillion naira.
Yeah, more than 621.6
billion naira in just one day. That's no thanks to the likes of Dangote Cement.
Same Dangote. Exactly,
the same Dangote. That's the number 2 most capitalized stock on the Nigerian Stock Exchange. And then as well, surprisingly, the share price of GlaxoSmithKline was also among the decliners, which added to
time for profit taking.
Yes,
I would say.
Exactly. Just that's the word. That's the magic word. Profit taking. So for midweek trading session, that's the red color that you see there, printing for the benchmark indicators of the stock market. Year to date, we're down, where it's moderated from the 27.46%, which we talked about just yesterday, which it started the year at about 51,595.66, but now it's moderated to about 25.2%, but for Wednesday it was down by 1.75%, and then it has fallen below the 65,000 point level, as well as the market capitalization, which has fallen below the 35. I mentioned 35 trillion naira level, but it has gone down by about more than 620 billion naira in just one day. No thanks to the sell pressure on 27 equities led by Dangote Cement. It was down by about 9.1% by approximation. Take a look at the sectoral performance. Insurance sector was the only gainer there. That counter is always on the opposite sides of direction or movement when other stocks are moving. It was the only green. It was the only one in the green territory, while all the rest recorded profit taking from investors in that space. Take a look at the activity. In terms of activity, it's also all in the red. You can see there quite a very red picture. Now, to give us more details, let's talk to Onye Idume Egwarie, equity trader at Stanbic IBTC Stockbrokers, give us more details about Wednesday's performance at the equities market. Thank you for joining us, Onye.
Yeah, hi. Thank you for having me. Good morning, Nengite. You just said, we saw lots of profit taking in the markets. Generally this week, we've seen mixed sentiments in our space. What we've seen is that some people are actually taking advantage of the fact that they came in at lower levels. So this is actually a good level for them to actually take profit in the market. And like you mentioned, Dangote Cement is one of the top 5 most capitalized stocks. So usually any price gain or price loss in that stock, you would always see it significantly affects the ASI. So that's why we saw about 175 basis point loss, or should I say drop in ASI yesterday. So if you look at the market, we still see some investors generally still staying on the sidelines, apart from those taking profits, just trying to watch what would happen in the long run in terms of like what we've seen in the economy and the ministerial nominees and all that. We just want to see what direction the economy is heading to. So even the Dangote cement that even traded yesterday that dropped, in terms of market volume, we didn't see much activity in that name because it wasn't even up to 200, and it wasn't up to 200,000 units that traded in the whole market yesterday that actually dropped the price for Dangote cement. Also, to same thing with GSP. I guess some investors are now comfortable to actually take profit at those levels, because initially when the news came out, if you recall, GSK mentioned some time back earlier this week or sometime last week that they intend to cease business in Nigeria. So at first we saw the stock go on full bid. So now some investors are comfortable at this level to actually sell off. So that's why we've seen the market turn the other way to a bearish market.
Yeah, okay. So now when you take a look at all of that, at the same time, we're still in earnings season, second quarter results. I understand that some results are still trickling in. So what impact are they having at the market as the market is in intraday session as we speak?
So I would say mixed sentiment. So it depends on what stock you're looking at. So if you look at it, the consumer sector, most of the results were not good. We saw a drop in profit in names like Okomo, USC, and even Nestle recorded a loss. Some of this has to do with their revaluation and all that, based on the fact that they have dollar liabilities to make. And so based on those, we've seen some sell-off in those names. And then, of course, we've just seen some people hold on their buy those names. Then if you look at for the bank names, we still expect most of them to release their results. And in terms of like the GT designers, the Stanbic, we still expect their results. But for those that have released, we've seen muted reactions in some names. Okay, take for instance Presco. Presco released their results, a good result at that, gaining profits. But we've not seen much reaction to that in the market. But it's positive for them because they were initially suspended for not filing their results on time. For now that is released, for now we don't see any aggressive buying in the market. We just see kind of muted reaction to that in the market.
Okay, I think we'll leave it there. And of course, like I'd always say, our eyes are always on the market, equities, fixed income, as well as the money market. So that was Onye Idume Igariwe, equities trader at Stanbic IBTC Stockbrokers. So that's it for the markets. We'll have given you more details about other markets if you're interested.
We'll do that tomorrow.
Thank you.
Thank you so much, Aniti. All right, let's move over to London now. It's good to have Juliana back. Well, Tenny helped us not to miss you so much, Juliana, but it's good to have you back. I hope you had a good time away now. And you come back to some good news, at least in Scotland. House prices fall. Well, you come with good news.
Good morning, Innie. You always give me a lovely welcome back, don't you? Thank you so much. But yes, we've had some really interesting data from the Royal Institute of Chartered Surveyors, who have been looking at the property market, not just in Scotland, actually, but also across the United Kingdom, because, of course, there's been lots of activity in the property market, not just because of Liz Trussonomics, which, of course, saw mortgage rates spiralling, but also because of rising interest rates. They've risen to about 5.25%, which has really pushed up the price of borrowing, costing lots of people lots of money. And now the Royal Institute of Chartered Surveyors is showing that that is having an impact on the housing market in Scotland. It's shown in July that house prices have dropped by about 0.7%, because a lot of people are now really reflecting that big purchase and asking themselves whether or not it is worth it. So not only are rising interest rates affecting beleaguered consumers and those who hold mortgages, but it's also affecting the mortgage sector. I think just this morning, just before I came into the studio, Halifax, which is, I believe, the second biggest mortgage lender in the UK, they've written an open letter, as well as nationwide, asking the government to help them bring down their interest rates so that people are not having to spend so much. So if you are somebody that has a big mortgage in the UK and your 2-year fixed term is just coming to an end, then of course you're going to go to a new mortgage rate, and it's about 6.6%. I think they're trying to reduce it to about 5.25%. So it just goes to show that these interest rate increases, which I think have risen 14 consecutive times, not only having an impact on mortgage borrowers, but the entire mortgage sector, which is why we're seeing this decline in Scotland.
And the land and buildings tax is also on the high, about 50% in 2 years increased.
That's absolutely right. We're bang on Scotland, aren't we, at the moment, Innie? Because the land and building transaction tax is a property tax very similar to what we have in England, here where I am, which is stamp duty. But in Scotland, it's called the land and property tax. And what the Royal Charter has shown is that in the past 2 years, it's increased by about 50%. I think last month alone, the Scottish Government received about £61.7 million through this tax from about 7,000 transactions. So it just goes to show that it is increasing. I think it's increased by about 50% in the past 2 years. Lots of economists up in Scotland are a little bit worried about this because there is a large discrepancy between how much people pay when you purchase a new home in England compared to what you pay in Scotland. So in the UK, in England at the moment, you pay nothing on a home if it costs up to £250,000. I believe between £250,000 and £400,000, you pay something like 10%. But in Scotland, you have to start paying that tax from about £150,000. It has increased dramatically. There are concerns that if the discrepancy gets any wider, then it could put off wealthy investors or any first-time buyer that wants to leave England and go up north to Scotland. So yes, big emphasis on Scotland this morning.
Yeah, it's a Scotland morning. We'll do London later in the afternoon today, Juliana. Thank you, and good to have you back.
All right, thanks so much. Thank you, and it's great to be back with you.
All right, now there you have it. You see it before I do. It's the Bitcoin or the crypto map, and we see that it's a topsy-turvy movement for Bitcoin this week. One day up, the next day down. Today it's down. It lost 0.33%, even though it's still holding a dominance of the crypto market at 48%. But I mean, the 30,000 is looking so difficult to hit these days. I don't know what's going on. Ethereum is also down 0.07% at 1,853.63 BNB. Let's look at the numbers because we see Doge has a little bit of green there. The Fear Greed Index, we haven't done this in a couple of days. I missed it. It's neutral at 53 there, but neutral, neither this way or that, even though we've seen, the movement on Bitcoin hasn't been looking so friendly. More of that. Bitcoin, I mean, is down, and Ethereum is down, BNB is down. So maybe this is where the neutral is. We have 3 negatives, and these are the top guys, the very powerful guys. And then Cardano. XRP is back in the news, as we would discuss with Solomon in a couple of minutes. Hi, Solomon. Good morning.
Good morning, Innie. Good morning.
Yeah, so it looks like Bitcoin hasn't made up its mind on which way to go this week. Today it's in the green, and then it goes up, goes down, and comes back. And what's going on? We have inflation numbers today. I think that's already priced in.
Yeah, so Bitcoin has actually been ranging for the longest period of time. It's been ranging, and this should be about the 7th or 8th week that we've been ranging from above $28,000 to a maximum of $31,000. And that's why, as you can see on the greed index, you can see that fear and greed index is actually on a neutral, which means that traders are now extremely comfortable with what's happening in the market, and we're still waiting to know which side Bitcoin would go to, if we would be seeing a bullish market that's above $32,500, or if we would resume a bearish market, which would be if we close below $28,000. So far so good. Everyone is sitting pretty tight, and we are waiting to see what would happen. So we have very little trading activity going on right now in terms of Bitcoin. Only those that are swing traders and those that are scalping, they are the ones trading currently.
Yeah, but we see XRP is not that strong at this time, with the US SEC appealing that case against them.
Yeah, and definitely investors are quite skeptical right now because they are trying to overturn the ruling, which was actually in favor of XRP a few weeks ago, which made it make a new all-time high for this year. And the way it's looking, we don't know yet. We can't really say. It's just a situation of if they evaluated any of the securities law based on how they actually issued the sales of XRP. So previously it was in their favor, but the SEC right now is appealing, and trying to say it wasn't ruled the way it was supposed to initially. So on the 16th of this month, we'll find out when they would have an opportunity to make the first hearing. So that's when we'll know. But basically, you can't really say anything about XRP now. I won't advise anyone going into XRP until the storm is actually cleared.
What are the likely scenarios? You know, the SEC comes up tops. What happens to XRP and its investors, or XRP gets the win again, then what happens?
I strongly believe it to be extremely bullish for SRP. They get the win. And I'm quite skeptical, personally, that's my bias, that they would get the win. I believe they would get the win because let's not forget the case has been lingering for over 4 years now, and so far so good. We haven't seen anything concrete that will make them not to get the win. So I strongly believe they would get the win. It's just a matter of time. Hopefully it doesn't take another 1 year.
Well, I'm sure investors there or people will just start selling off at this time and not wait to see the risk. It's been a long time coming. But do you see a recovery on Bitcoin maybe this week?
Okay, going to this weekend, what I see happening is we'll still consolidate around 29,500, and I'm expecting by Monday, Tuesday next week for us to be able to make a move for about 31,000. But in the month of August, I believe we should be able to tap the liquidity at around $32,000 before we can see a huge dump below $28K.
Wow. All right, we'll be looking at that. Thank you so much, Solomon Amunde, for your analysis this morning.
Thank you. Thank you.
All right, so that's where we draw the curtains on Business Morning today. Today is Thursday, so we still have a final one tomorrow, 10 a.m. But before then, I'll be back at 1:30 for Business Incorporated, giving you update from the world of business. What's going to be happening in Africa? You just need to tune at 1:30. But remember, you can watch Business Morning, Business Incorporated at your convenience from our YouTube channel at any time. I'm Amy John Rekla. Go out there, make some money. I'll see you at 1:30.
Where's your power?